Hey, do you ever feel like when it comes to money and finances, you feel like you're pinned down? It's almost like you're in financial slavery in a way as a business owner, as even just a normal person outside of that. When you start thinking of money, like when money comes in, where does money go? Are you saving it? Are you investing it in stocks? Are you doing a crypto? Are you doing IRAs? Do you have 401k? Just savings account? Like, what do you do with it? And then, of course, there's taxes and all of that stuff. So a lot of us find that we're feeling kind of trapped or at least confused, and we don't really have the control or predictability of things. This is exactly why I brought Hannah Kesler from the Money Multiplier onto here to talk about how there's a different way of leveraging some financial tools, but also just the flow of money, understanding that so you have control and ultimately achieve financial freedom so you can build your own banking system. It sounds probably radically different than what you've thought about. And that's why she's here, and she's fun. She breaks it down in a simple way. You're going to enjoy it. She's also giving you some really cool resources. So jump into it. Let's go meet Hannah. With smaller budgets, shorter timelines, and sky-high expectations from customers, growth is feeling kind of painful for a lot of business owners right now. But HubSpot's here to help you out. They just announced over 200 major product updates that makes the impossible feel a lot more possible when it comes to growth. They have something called Breeze, which is HubSpot's suite of new AI tools that helps you get through all the busy work and into that more impactful work. They also have something called Breeze Copilot, which is your sidekick to assist with a bunch of different tasks and boost productivity. They also have Breeze agents to help automate a lot of manual time-consuming work and also add extra expertise throughout your workflows. And then they have Breeze Intelligence, which is this big comprehensive picture of your prospects that shows you who's most likely to become loyal customers. They've also reimagined their marketing and content hubs, so they have a whole bunch of new ways that you can create better content. There's updated features there to generate better leads, and also tons of ways to up-level your marketing and revenue forecasting. So try this out for yourself. Get ready for some growth without the growth pains. Visit HubSpot.com/spotlight to see them all and demo them for yourself. Hannah, it's cool to have you here, and we finally made it happen. How you doing?
I'm doing good. Actually, it's been a good few months of summer. So I'm home now for the next few weeks, which is really nice. But actually the travels are gonna start ramping back up again. So speaking all around the country on this concept, the infinite banking concept. So I'm excited. People can see me all around the country if they want to.
Yeah, well, you live that van life, right? With your cats? Is
I,
that
I do. I do.
sounds fun. Where
Yeah.
are you always buzzing around? I mean, not always, you're home base now, but that's what, 80% of your time or something? Are you just buzzing around,
Yeah,
going
yeah.
to
So
events?
I would say it's about 20% of my time's here in Daytona Beach, Florida is where I live now. I actually grew up in the Kansas City area. So I'm a Midwest girl, but I moved down here to Florida in 2018. So been around here, what is that, 6 years now going on that I've been down here. But then in my summer months, I like to hop in the van and travel around the country. I love camping. I like going to music festivals and different things. Actually, a lot of my friends call me like that modern day hippie, if dare I say that word.
Hey, it's all good. It's welcome. Cool. I mean, you're living it and you got the freedoms, and obviously there's a reason behind that too, which is why we're chatting here. Because I mean, obviously there was, well, how long have you been doing like the van life kind of thing, like where you've been moving around?
Yeah, yeah. And I can even get into how I even purchased the van if that's something that your listeners would love to hear about.
Yeah.
But, through my privatized banking systems, I went out, it was back in 2020 or 2021. But I went and I bought the raw hard shell of the Ram Pro Master over in the Tampa dealership. And then I came home and I found a guy. Actually, I found him on Shark Tank. And I just called him up one day and he had an opening. He said, "Hey, put $500 down." I didn't even think a second thing of it. Gave him my credit card, secured my spot. And he was living up in Nashville, Tennessee at the time. So I drove the van from Florida to Nashville, dropped it off for about a month, and he did the whole van build out.
It's
So been
custom.
doing it 3 or 4 years.
Sweet. You're doing it right. And I like how you just call them up. You're like, Shark Tank looks like he knows what he's doing. All right, let's go. It's close enough.
Yeah.
That's sweet. Well, yeah, I want to talk about how you purchased it. Maybe we'll do that and more of like the how too. Or maybe that's how we start. Because also Brooke on my team, she does professional mountain biking, but also works with me. She does van life stuff too. So she's always buzzing around the country, going to events. So I'm sure she'll love this interview. Um,
Yes.
there you go, Brooke. So, I mean, your background is like you're working with your dad, and obviously not day to day or any of that stuff. But you have a podcast, Money Multipliers. The Money Multipliers is your guys' company. Tell me what that is, why you're working with your pops, like what kind of influence he's been onto you. And because I know that's going to lead into kind of the bigger concept here.
Yeah. And my company is the Money Multiplier, and we are just 100% the infinite banking concept. So, and I'm gonna show y'all if you guys are listening like on YouTube. This black book right here, Becoming Your Own Banker by R. Nelson Nash. You need to add this black book to your wealth building library. So this is all that we teach, is really to get out of the commercial banks. Stop letting the government and the Federal Reserve System dictate our lives. So this concept, so actually my family was a consumer of this first. Way back when, actually dad's a chiropractor. That's what we were doing in Kansas City. He had 5 clinics in the Kansas City area. And he was actually at a chiropractic convention, and there was a gentleman up on stage teaching about this. And that was back in 2006. Long story short, dad thought it was way too good to be true. He bought Nelson's book, he set it on the shelf, and he didn't do anything with the information. So it was 2 years later in '08, he went back to the same chiropractic convention. And that's where he was greeted by about 10 or 12 of his colleagues that were coming up and hooting and hollering about this banking concept. And they were like, Brent, this concept, isn't it so cool? I'm able to pay off my debts, pay the expenses of the office, pay the key employees in my business, and I'm not spending any more money. I'm able to recycle and recapture it, keeping that money within the family. And that's when dad was like, okay, there's got to be something to this, because there's no way 10 or 12 of my closest colleagues are lying to me about this. So that's when my family took action. And back then in '08, dad had almost $1 million of debt. And by implementing this concept, he was able to pay it off in 39 months. And he didn't change anything that he was already doing. He didn't see any more patients, work longer hours, charge higher rates or whatever. All he changed is where the money was going first. So since 2008, we've been consumers of this. Dad started teaching it in 2012. And ever since in 2017, that's when the Money Multiplier has been about. Because back then, dad was actually working with his old mentor who really got him into this concept. But unfortunately, he passed away. So rest in peace. But then that's when the Money Multiplier came about in 2017. And so we
Wow.
just travel around, teaching on this stuff.
Okay, this is wild. This is cool because I'm familiar with the infinite banking concept, and just like your dad and yourself, I've had so many people around me talking about them having their own plans and then the model of how it works, and it's basically your personal banking system outside of the grasp of the public markets or your bank and all that stuff. And I also had that feeling. I'm like, is this too good to be true? I need to learn more. How can I use it as a business owner? Like, what's the strategies? So the fact that, and this is what I want to cover in this podcast, because I think this concept, some of you might have heard of it, because the more I talk about it, it's like, I would say it's like 20% inside the marketing space. Like, some of my masterminds know about it. Most of them don't, though. So, but your dad, like the fact that he was a chiropractor, I love that. I love chiropractors. I know so many of them, and almost all of them like go in and they do other stuff at a chiropractic work. It's like almost all of them. It's crazy.
Yeah.
So there's some weird trends out there.
Unconventional. What I love
it's true.
Chiropractors, they are outside the box, unconventional thinkers, and those are my people.
100%. And that's I got to thank a couple chiropractors for even just letting me like where I'm at right now. They've made some of the key introductions, so it's really cool. But I want to go back, like $1 million in debt. Like, holy snaky. Like that's, I don't know if anybody else is listening, watching, has that kind of debt, but even if it's half that, a quarter of that, I'm sure it's a big pressure. I know it can be. I've had a lot of debt, not that much, but how did he get out of that? And also, he's not the money guy, obviously. Like in this book, thank you for becoming your own banker by Nelson Nash. I have not heard of that, so great. I'm gonna put that in the comments or in the description below. But how does a guy that's not a money guy? I mean, I'm not saying he wasn't. Maybe he knew some stuff before, but like he was a chiropractor, $1 million in debt. How does he turn that around?
Yes, yeah. Because and actually this is what I've learned from my father is that, it doesn't matter how much you make, it only matters how much you keep. Dad was a very successful chiropractor making over $1 million a year, but who cares if you're making over $1 million if your overhead is 975,000, right?
Yep.
So it really gets into our habits, because let's be real, they do not teach us about money. What are we taught? We're taught to go out there. We got to make money to live on this God-given earth we call America. And then what do? We go put that money at the commercial bank, or we give it to a financial advisor who thinks they can manage the money better than we can, or we go and stick it in our 401k and we just hope and wait that there's some left over for us at the end of retirement. So the biggest thing, and totally exclude the infinite banking concept out of this, you need to understand what's coming into yourself. No matter if you are a business owner, entrepreneur, you're a W-2 income earner, you need to understand how the money is flowing in and out of our lives. And so how I actually do this, I mean, shout out to an app called Rocket Money. I love Rocket Money. I pay them $5 a month. I got all of my credit cards hooked up to them, all of my bank accounts, and it really tracks my spending, what's coming in, what's going out the door. But the biggest portion of what I look at is how much am I keeping monthly? And then from there, when I really establish that keeping, and my advice to the listeners, I think that we should be saving and keeping at least 10% of our income. So if I'm the type of person, I'm making $100,000 a year, I should be saving and keeping at least $10,000. And so from there, that's the money that we start to flow into our privatized banking system, or i.e., our whole life insurance policy. And oof, probably a few of you people, you probably turned off the podcast because you're thinking to yourself, Hannah, I know everything there is to know about whole life insurance. Dave Ramsey and Susie Orman, they told me whole life insurance is the worst place to put my money, right? But why we're doing this, because my number one thing when I go and I teach this live or on my podcast show or webinars, whatever, I always ask, well, why whole life? Why are we using whole life? And when you really get to research and dig deeper into it, commercial conventional banks, they are the number one purchasers of whole life insurance in the world. Wow. And it's like, okay, are they stupid, or are they doing something the rest of us just don't know about? They're probably doing something.
Wow, I didn't know that. That's a crazy stat, because if you follow the money, right? Like that's always the case. And when you invest, like this is, the way it was introduced to me, this whole concept is like, this is the way that the 1% invest. It's how the rich get richer, or whatever it might be. And, don't drop any kind of negative stuff that you might have with those concepts. It's fact, like you got to play the game, right? And yes. This is some of like the insider knowledge of how the game is played with a different type of investor.
Yes, yes. And Joe, I want to be totally clear too, because this is not just that traditional whole life policy they can go buy off the shelf. Call up State Farm, call up Nationwide, or call up our brother-in-law that sells life insurance, right? We all got a brother-in-law that sells life insurance. It's got to be designed specifically for this concept. Have that immediate high cash value. So what I mean by that is when I put my premium deposit, and here's where the paradigm shift starts to happen. When I put that premium deposit into my policy, I have an immediate cash value that I can pull out and start using. And my definition of immediately is within 30 days. So it's got to be designed specifically for this high cash value banking.
Okay, so let's do this because yeah, that is a paradigm shift. I want to maybe let's preface a little bit more about like how we get to that point because the big idea here really is that there's a different way to manage your money and grow your wealth, right? And so walk me back a little bit because you're a second generation infinite banking person, and like this book, I don't know when it came out, but let's see here, it's 2009, but at least this one on Amazon says that maybe earlier.
Fifth edition, yeah.
Yeah,
I think
that's
his
right.
first writing came out in the 80s or 90s.
Okay, yeah, cool. So it's like the concept isn't really new, but it's just not understood. So remind me, like, so as a business owner, myself, I'm the avatar, but other folks listening here, what's the big idea? Like, why this? Why not 401ks, IRAs, other investments that might be the public, stocks, stuff like that?
Yeah. So number one thing is that because the policy, right? This is not my investment. This is just the place of where I warehouse or I flow the money through first before I go make my investments. Because and it doesn't just have to be investments, it can be expenses, taxes, my charitable giving, whatever it is. But the whole idea is get the money through the policy first. And that's why I always say it's just adding the one additional step. Because when that money gets inside of the policy, now it's inside of an environment where I am earning uninterrupted compounding interest. And I can get deeper into that, but I get uninterrupted compounding. On top of that, it's tax-free growth. And what's our largest eroder of wealth? It's taxes, especially you, Mr. Joe, being a Californian.
It's true. Luckily, I'm a business owner, so I can write. But you're totally right. Yeah.
Right. So tax-free. And then on top of that, it's a protected asset. I mean, there's big stories out there, and we don't got to get into it right now. But if I, God forbid, as a business owner or a person, if I ever get sued, nobody can come after the money in my policies, but they can most certainly come after the money that's inside of my bank account. So the whole idea is that I am not going to reinvent the wheel. I'm just going to mimic and imitate what these elite and wealthy folks are doing. So how we've been taught is when I go make my money, I go put it down at the local bank just because, well, that's where they keep the money. And then what these bankers are doing is they are lending out our money and they're making a good living off of our money. So I'm just going to flip that script. I'm just going to make my deposits into my bank, i.e. the policy, and then I'll be the one to lend it out to do whatever with. And then now I'm making the interest, those profits and dividends.
Bam. All right. So thank you. That was a perfect, and I love the fact that this is where the flow of money goes in this strategy that you're talking about, instead of anywhere else that you might house or save your money, even if it's a savings account, which are generally not good, but, and even emergency funds. Like I'm thinking of all the different things that we might be, putting money away for as business owners, just as people in general, it's smart to do that. But the fact is, with infinite banking and this kind of policy, like you said, uninterrupted compound interest, I definitely want to get into that because that's very exciting. Tax-free growth, it's protected, but also at the same time, it now becomes a bank account, right? Like it's one, you said, after being funded 30 days. And I'm sure I know there's more details to that depending on the policy and stuff, but generally you have access to that cash. And if I'm not wrong, you also make the terms on when you take that money out, right? So like you are basically in charge of your own money, whereas that's not the case other places.
Yep. All about the control. It's who controls that transaction. Because I could go inside of my policy and let's say I'm in the market, I want to go purchase a car, or maybe I want to purchase an investment property or do some lending deals, whatever it is, you are going to go out and invest in the things that you like, know, and understand. But when I am taking that money out of that policy, I am never interrupting the growth of what's happening that's inside of it. Now, because here's the thing, I don't have to pay myself back, let alone even pay myself back with interest. I should play an honest banker with myself, pay myself back and just treat my money just how I treat the banker's money. But I don't have to, because one thing that I could probably do a better job of even talking on is that there's this death benefit that's tied to the policy. And there's going to be that permanent guaranteed death benefit, whether you like it or not. So if I go out there and I never, ever, ever pay back a policy loan, what the insurance company will do is at the time of my passing, or I like to call it my graduation date, but
Yeah.
when that graduation date comes, they will just take that death benefit and then subtract any outstanding loans. And then that remaining portion, that's what will get paid out to my beneficiaries.
Okay. So the advantage of, if you were to, I guess, let's say fund it $100,000 worth, $50,000 worth, whatever it is, but you
Yeah.
take that money out, you want to go buy a car, you want to invest it in real estate, whatever it might be, or back in your business, even give yourself a
Yeah.
loan, right? You don't have to pay that back technically. And
Yes.
that just deducts from the bigger, the benefit, the
Yes.
graduation benefit, we'll call it at the
Yes.
end.
And I make
Okay.
the joke, don't leave your death benefit to your ungrateful children. You use all that money, right?
Well, saying that though, at the same time, isn't it a tax-free way to pass down legacy to your children? I know you're saying it's really it's true. It's like use your money now, but at the same time, what you can do is set your children up right
Yes.
for tax-free assets, basically. Like it
Yep.
could be millions of dollars depending on the policy, right?
Yes. Yes. And that's the fun thing about it. I mean, how fast or how slow folks go with this is really up to them.
I want to pause this for a moment. Shout out a friend of mine, Sonia Thompson. She's been on this podcast a few months back. She hosts a podcast called Inclusion and Marketing. It's also brought to you by the HubSpot Podcast Network, the audio destination for business professionals. So her show, Inclusion and Marketing, digs into all the important topics around belonging, diversity, customer experience, and really bringing people and rallying them around your mission. You're literally including more people behind what you think is most important. So it's an awesome topic. She's made a full podcast about it. Listen to Inclusion and Marketing wherever you get your podcast. Are you tired of the hassle of building sales funnels? I totally get it. I've been there. You started your business not to be chained to your laptop all day. You built it for freedom. And thankfully, there is an all-in-one platform that makes it easier for you so you can focus on attracting customers online. The platform is called Kartra, and it gives you all the tools you need to grow your business. The best part is Kartra comes stocked with all the done-for-you campaigns, so you don't have to worry about thinking about building from scratch. Everything is designed, connected, and written for you already. It also leverages AI to help you with some of this writing. All you got to do is just customize this to your liking, and then boom, you got a fully built sales funnel for you. This is marketing made easy, so go try it out for free. 30-day free trial over at hustleandflowchart.com/Kartra will get you there. So again, that's hustleandflowchart.com/KARTRA.
So I started my first policy when I was 18 years old. I'm now 25, okay? And a lot of y'all are probably thinking, who is this young girl knowing about all this stuff? Well, it's just because we've been doing this in our lives for all these years. And so, when I started my first policy at 18, I was a waitress at Cracker Barrel. I was not even in this business with Pops whatsoever. I was still doing a little bit of community college, still trying to figure out what I wanted to do with my life. And so Dad came to me when I turned 18, because you got to be 18 in order to own a policy.
Okay.
I'm not saying that parents out there, you can't own policies on your children or be the custodians, right? But you got to be 18 and be in order to be the owner of it.
Got it.
So when I turned 18, Dad came to me and he says, okay, now that you're 18, I want you to close your savings account, and you've been putting in about $100 a week, which is $400 a month, and you're going to start your first policy $400 a month. And back then, I didn't know everything that I know now, and I'm like, okay, Dad, I'll start this stupid life insurance policy, sure, right? But you don't got to have big buku bucks just to start this system. I started where I was comfortable at with that 400 a month into it. I got people who do as little as $100 a month all the way up to $500,000 a month. So you just put a number in between there.
Yeah. So like really there's no minimum. I mean, depends on the policy, right? At the end of the day. Like what
Yes.
it shakes out to be your monthly premium. Because I'm curious, I guess breaking it down how it works, all the way from like you mentioned, your brother-in-law who might be selling life insurance at State Farm or wherever, they probably don't have the whole life insurance policy that can do this kind of thing, right? So
Bingo.
yeah, so talk to me about like I guess what's the difference there for one?
Yeah.
How do you get these plans? And then we'll start kind of breaking down, I guess, the mechanics of how it works.
Yes. Okay, and I'm going to get technical. So for my
It's all good.
analyticals listening, so the only special thing about what we're doing over here, because it is a whole life policy. So it's a whole life policy at the end of the day. But what we're doing is we're overfunding what's called the paid up edition rider, or PUA for short. You'll sometimes hear me say PUA. And here's how I like to describe it. If you think about the policy almost like a rocket ship, okay? You got the base of your rocket. Think about that as that's your base premium. So if you ever go out there and you go and purchase a whole life policy off the shelf, 100% of your premium is going into that base premium, that base policy.
Uh-huh.
But what I'm doing is a fraction of my premium is going into the base, and the majority of it is going into the paid up edition riders. And think about those. They are the booster rockets that are attached on to the rocket ship. And the reason that we need those is because that's what gets the rocket ship out of the sky and out of the atmosphere. So, in the policy world, that is how and why we're able to have that immediate high cash value from day one, month one. So, if we're not adding on those booster rockets or the paid up editions, it takes a while to start to build up that cash and the equity inside of that whole life policy.
Got it. So that means like let's say if the policy is or the monthly premium is what like $250, let's say.
Mhm.
Um, you would want to pay 500 or 400 like in your example, right, of $100 a week to kind of to basically do the PUA, right? To put the boosters on there.
Yeah. Or I'll say it this way. This is
Yeah.
how I like to describe it. Because I like to keep this very easy.
Yeah.
So if somebody comes to me and they say, hey, I want to do $250 inside of my policy. Well, I am already going in there and breaking it up between the base and our paid up edition riders. So
Gotcha.
what I do is I take 40% of it, or $100 in this scenario, that goes into our base. And then the 60%, the $150, that's what's going into our booster rockets or the paid up editions.
Okay. Got it. That makes sense. And if it's all lined out in the beginning, then think about this. You're just throwing money into the same place, right?
That's
It's
it.
one payment. Yeah. Okay. That's cool. So how do you find a policy like this? And I'm sure and probably work with these folks all the time, but like as opposed to going off the street, like how do you actually do this?
Yeah. Well, and so this is what I do in my life, right? So I am what they call an IBC practitioner. IBC just stands for Infinite Banking Concept. But at the end of the day, work with somebody that practices this in their own life. That would be my first advice. Because if it's not me, I get it. Maybe you don't like my vibe or whatever. Go out and find somebody who practices this in their own life. And what I would recommend is being an infinite banking concepts practitioner. And how you can find that is if you go to infinitebanking.org. There's a school out there. It's called the Nelson Nash Institute. And on there, you can actually have that there's a practitioner's finder, and you can find somebody that's local to you if you want to work with somebody that's local to you in your state. But at the end of the day, I just hold my life insurance license. That's really the only credentials that I do. But what makes me different is this is 100% of what I do. So folks are calling me up asking about long-term care or term insurance or whatever, I'm going to go send them to that expert down the street because I am just 100% the infinite banking concept. And I guess my last thing I just want to say is that I would really just go out there. If you want to go to our website, themoneymultiplier.com, there's a resources tab, and I would click on presentation, and I would start there first. It's a 90-minute presentation, and it just really labels out the foundation of, well, what is this? How are we doing it? Why do we even want to do it? And that's really where I would like to start first. And some of you listeners are probably thinking to yourself, oh my gosh, Hannah, 90 minutes? I don't have 90 minutes. Well, yeah, you do, because I see you at the end of every single night turning on The Bachelor and American Idol, and you spend way over 90 minutes watching those television shows.
You've been watching me, Hannah? Come on.
This is about your financial health. You got to get serious about your financial health because nobody's going to care more about it than you.
Damn right. And think about how many years the fact that you start at 18. So that's awesome. Thank you, Dad. And not no one, but most people have no clue even this concept exists. Doesn't matter what age you are, but talk about so the compound interest or uninterrupted. I want to go back to that again and talk about the power of compound interest again. I'm sure we've all heard it, but the fact in this, it's uninterrupted. And break that down a little bit more because the value of obviously doing it sooner than later, you gotta make more money.
Absolutely. No, absolutely. And I don't want to get cheesy on you right now, but there's a guy, all right, Albert Einstein. Albert Einstein says that compound interest is the eighth wonder of the world. And those who understand it, earn it, and those who don't, pay it. So all that we're doing here, and let's just even take it from here. So this is what people normally do. First of all, people love paying cash for things. They think when they pay cash for stuff, they don't got to pay any payments and they don't got to pay any interest. And that's really not the truth. So when I'm going out there, let's make believe that I want to go purchase a $50,000 car. And let's say that at my local checking or savings account, I have $50,000 that's in there. And let's just make believe that I have a really, really good bank, and that bank is going to pay me 4% on my money. So if I go down to the bank and I withdraw this $50,000 and go purchase the car, well, yeah, okay, I've accomplished the goal of buying the car, but that $50,000 is gone. In order to get it back inside of my pocket, earning me interest again, I got to go out there and I got to work for it or earn it somehow. So all I'm saying is just add the one step of running the money through the policy first. So if I take this money, I roll it through my policy, and then let's say I have a cash value of $50,000 and I take it out to go pay for the car, I'm not withdrawing that money. I'm taking out a policy loan. So what that means is I'm putting my policy up for collateral and I'm taking a loan from the general funds of the insurance company. And I'm collateralizing the death benefit. That's what I'm doing. If I don't pay it back, then the insurance company will just subtract that $50,000 from my death benefit at the time of my passing.
That's huge right there, by the way. Like what you just said there, that's where the power, and I think that was the big aha when I learned that. I think it's two sides, right? The insurance company has the collateral, Like they know they're back because you got to keep paying your premiums, of course.
Yes.
And then the money that's in the account, like that's another, the second kind of collateral in a way that the insurance company, this is why you can do this kind of loan for yourself.
Yes, yes. And so I'm using their money. And so when I'm using their money, that allows my 50 to still sit in the policy to grow and compound as if it wasn't touched.
Mm-hmm. Got it. That's huge. I mean, I don't know any, even like an IRA. Like I took out money from my IRA to buy the house I'm in right now, and this was years ago. But I had to pay on that money,
Yes.
and because I wasn't necessarily ready, I got a good deal on a house. But like the fact is, that wouldn't have had to been the case in this scenario. That
That's
I
right.
wouldn't have that penalty, and in fact, I would still be growing interest on that money. So in retrospect, I'm like, damn, that would have
No,
been nice.
and you don't know what you don't
Yeah,
know. I
that's
mean, my
true.
dad
Yeah.
didn't even start his first policy till he was 42. All right. I get a lot of people. If I had $1 for every time somebody told me, oh my gosh, Hannah, I wish I learned about this so much earlier in life, we wouldn't be talking right now. My butt would be on a beach in Mexico drinking a margarita.
With the
Just
cats.
kidding. Right.
That's
But
awesome. Yeah. Go ahead.
so with this, you just got to start at where you're at right now, okay? Because and here's like another quote, it's a guy by the name of Rick Warren. Rick Warren says that life is like a marathon. It doesn't matter how you start, it only matters how you finish. This is the game of life. And like a lot of my real estate friends, they come to me because I'm a real estate investor. That's just what I like to do in my investment lifestyle. But they come to me and they're like, Hannah, well, why don't you have a self-directed IRA or a traditional Roth or 401k, whatever? And nobody has just shown me that those types of vehicles are more powerful than my policies and what I'm doing over here. Because I agree, there's some people who are using those self-directed accounts and they're saving on capital gains and different things like that, which is totally fine. But I do not want to be limited to what I can use my money for, get penalized, or have it be invested into the markets that it's going to go up and down based on these external factors that I cannot dictate. So it's three things: control, freedom, and then having the justice and liberty to do whatever I want with my money. And that's what I'm looking for when I'm deciding to put my money somewhere.
Yeah, you mentioned two things. So the growth, like the markets in general, like at the time of this recording, they tanked pretty hard just the other day. I don't know where they're going to be at when.
Trillion
Yeah,
with a T.
crazy. And you see, it's a worldwide ripple effect. I mean, that who knows where it's at by the time this gets published. But the point is, it's volatile. It goes up and down. You can't control it. It's yeah. This is where uninterrupted compound interest, knowing that this is an investment vehicle of its own. Like I've heard it related to, it's almost like real estate in a way. It's like you can kind of frame whole life, infinite banking, almost kind of like real estate in a way, at least the classification of it.
Yeah.
So
They appreciate an asset.
there you go. Yeah, and to the tax-free growth side of things, like I want to hit on that too, because as business owners, I'm curious if there's like different strategies or things specifically we should know about when it comes to the whole tax side of things.
Yeah. So pretty straightforward on the tax side. The whole idea is that I want to pay tax on my money one time only, at the lowest rate possible, and then get that money into a tax-free environment where it's going to grow tax-free. So the money that gets deposited into the policy, my premiums, that is post-tax money. Now, little asterisk here, all right, and I'm not a tax professional, not a CPA, go talk to one, but I have heard around the grapevine for my S Corp people and different things. If that business is funding the policy, there could be some tax deductions, tax write-offs there for the premiums that we pay into it, okay? But in normal sense, post-tax money goes into the policy, and then now it's in there growing tax-free uninterrupted compounding. So when I get to that point that I'm pulling out more from my policy than what I even put into it, that is all tax-free money to me.
Hmm. I'm going to check on that S corp thing just for myself and other people. Obviously, anyone else who's, because that's where I get very interested, as well as on the tax side. Being a business owner, like there's obviously advantages, but then if you can extend that even further, and again, use the investment vehicles, like real estate's kind of similar, like use that for your advantage as a business owner. Because again, and like I've had a lot of investors, real estate guys on the show, so that's why I wanted to kind of like tie it in together there. And the
Yeah.
fact that and I want to bring up the real estate thing too, so I'm curious of how that plays into this mix, because I know other people here are also in a similar boat. They have real estate, so it's like,
Yes.
do you stack this? Is there a certain flow? Like what's that kind of look at, like in a, yeah.
Yeah, because with my investment lifestyle, anything that I do outside of the policies, that's going to be taxed as ordinary income. But what I do is I actually utilize a system. It's called the 1041 trust and tax structure. This is what the big elite people are doing, like Melinda and Bill Gates, the Trump foundations. They got these big foundations, Warren Buffett, right? Okay, why are they giving away all of this money through their foundations to charities? Yeah, they could be really nice people, but there's probably something that they're doing, right?
Yeah, they're money
So,
people. Let's be honest.
yes. So what I do is actually I will take the money from my policies and I will actually put it into my business trust. Through my business trust, that's how I make all of my investments. So then money comes back into me. It goes inside of my business trust, and then it kind of trickles down. It goes from my business trust down to my family trust, then down to the foundation. And then what I got to do is I just got to donate at minimum 5% out of my foundation. And then that's what satisfies my tax liability for the year. But again, I'm not a tax professional. Go talk to those experts. But that's what I'm doing over here to minimize the tax gains.
That's pretty cool. And then, of course, you can invest in real estate and do all that stuff. That's mixed in with that whole flow.
That's right.
That's
That's right.
cool. So the 1041 tax structure, that I'm going to do a little research there, but that's awesome, because yeah, I've chatted with other folks and who are tax folks, and they mentioned there's power in foundations and charitable giving, and it comes down to structure. Obviously, what's right for your business. Obviously, go seek those people out. Some people specialize in this more than others.
Yes.
But Hannah, thank you for like at least giving us concepts to do independent research. I think that's the
Yeah.
most powerful thing here.
Hey,
Yeah,
your
go ahead.
listeners, they can reach out to me. If they send me an email, it's just my first name, Hannah. Hannah spelled the same ways, forwards and backwards. Hannah at themoneymultiplier.com. If you want some of those people's contact info, I'll turn you on to my people that I use. Because, I mean, honestly, the biggest person who can screw this stuff up is you and how you use your policies, how you use your trust structure. And I mean, who do you know better than you, right?
Yeah, it's true. So email Hannah, HANNAH at themoneymultiplier.com. Also ask her to get the book. I'm seeding this for
Yes.
you, Hannah. She has a
Here,
cool little PDF for you. She'll send
yeah,
you.
no. So this book right here for all my visual listeners here. This is actually a book that my dad and Chris Noggle wrote together. Here's another resource. Chris Noggle, Naugle. Go look him up on YouTube. He posts videos like almost every single day. Go and study that YouTube university content. He's very big in real estate. Actually had a show on HGTV at one point.
Cool.
But if you send me an email requesting for this book, I'll send you a copy of our ebook, Mapping Out the Millionaire Mystery.
Right on. So, all right, email Hannah. I will put her email in the show notes and all that stuff, so it's easy. Also, check out the presentation. I didn't know about the presentation, the 90-minute one. I'm gonna watch it because let's be honest, like We all should be doing this, or at least some element of it. But do your research. So that's at themoneymultiplier.com/presentation.
Yes.
Hannah, is there anything that I should have asked you that is like glaring here that we should talk about really fast?
Yeah, no, I would say my biggest thing, if you don't get anything from this conversation that Joe and I had here today, number one, treat yourself as your number one asset. Pay yourself first. And what I mean by that, when you get money that comes in through the doors, see, I don't even know you, but I know how y'all spend your money. You get the money that comes in, and I don't care how you make it, active income, passive income. It could be a check in the mail from grandma for your birthday, right? You get money that comes in, and then you go and pay everybody else first. The house people, the car people, Bobby's soccer practice, Susie's piano lessons, and you just hope and wait that there's some left over for you. Stop that. You need to treat yourself as your number one asset. So when you get money that comes in, how I mentioned, take a sliver of it. I suggest 10%. Move it to the side, move it to a savings, a segregated checking account, and then go pay all of your bills next. So pay yourself first would be my biggest advice.
That's a great step. And then also you mentioned rocketmoney.com. Could
I
be a
like
cool
Rocket.
little tool. Yeah. Any other tools that you think are great for money management or planning?
Rocket Money is my biggest one. And then I just have my trust and my foundations. I'll say this. I mean, over here at the Money Multiplier, we hone in a lot of energy, time, and resources into what we call the implementation team. Sometimes you'll hear me refer to them as the mapping team, but they are a group of people, and this is just a free service that we do for all of our members where we check in with our people every quarter. And again, I kind of make the joke, love me or hate me, but when you start this stuff with me, we're going to be lifelong friends from here on out. So,
Love it.
so we have those ongoing quarterly meetings and those tools that they'll build for people too. So that's just another resource that I would use.
That's beautiful. Well, cool. Well, Hannah, this has been super fun. I love your personality. So thanks for making it fun and simple to understand. Go check her out. Go email Hannah. And links to everything below. Appreciate you. So
I appreciate you. So one of these days we're gonna meet up in person, okay?
Dang right. So hit me up when in San Diego. I'll do the same in Florida.
I will.
See ya.
Thank you, y'all.